At William Buck, we've received numerous phone calls from concerned clients who have been impacted by the fallout of the coronavirus. For many of these clients, their cash flows have dried up entirely, and they're actively looking for ways to conserve cash and/or place their business into hibernation mode. For those clients, we are suggesting that they focus their efforts in 4 key areas. The first area to look at is employees. For most businesses, their employees represent their single biggest asset, but also generally their single biggest expense line item in the profit and loss statement. We recommend that employers explore all non-obvious options for reducing staff costs before considering layoffs. For example, by reducing hours to a 4-day work week, most employers would save 20% of their wage bill. Employees would generally be willing to consider reduced hours, including working half-time, if they know that doing so will help to reduce job losses. Employers can also consider the balance of accrued entitlements for annual leave and long service leave and talk to employees about whether they might be willing to take some leave now. This won't necessarily reduce cash outflows in the short term, but will help to reduce liabilities for the longer term. If employers are left with no other options, they can also consider standing down employees or doing layoffs. To the extent that they do stand downs, they might be able to qualify for the JobKeeper payments that the government recently announced. The second area of focus is dealing with landlords and/or major suppliers. Our suggestion here is to be on the front foot and open a dialogue early on. Many of our clients have had great success in negotiating rent-free periods, rent reductions, or rent deferrals with their landlords. In terms of dealing with suppliers, it's important to understand what is happening in your supply chain. A lot of our clients have also had great success in negotiating with their major suppliers in terms of pricing, payment terms, and also, in some cases, renegotiation of other contract terms. The next area to focus on is dealing with your banks. For businesses who have been affected by the coronavirus, our advice is to engage with your bank early on. Most banks have openly stated that they would consider repayment holidays for small business loans of between 3 and 6 months. Business owners should also consider whether this might be applicable to them for personal, investment, and home loans. The government recently introduced the $250,000 loan guarantee scheme, where small to medium enterprises are able to borrow $250,000 on an unsecured basis with no repayments due for 6 months. Our understanding is that the banks are taking a light touch credit assessment to these loans, and therefore we would recommend to clients to take out these loans even if they don't need the money right now. It's always better to borrow money when you don't need it than when you do. Finally, businesses should also look at their dealings with the ATO and state revenue authorities. Businesses should consider whether any of the recently announced government measures might apply to them. For example, the PAYG withholding cash flow boosts, the JobKeeper payments, and deferrals and extensions provided by the state-based revenue authorities for payroll tax. Businesses should also look at whether they might be able to vary down their PAYG instalments on account of reduced profits. Businesses might also be able to claim a credit for PAYG instalments already paid. The ATO has also announced that it would be willing to consider repayment arrangements and payment deferrals for businesses that have outstanding tax liabilities. For more information on the topics covered in this video, plus more, please visit our COVID-19 Resource Centre at williambuck.com.